Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-maggi.com. For all trade, we use the 5% money management rules and apply stop loss in all trade. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. Today is the 6th of December 2013 and the time in London is 48 minutes past 9 a.m. In New York, 48 minutes past 4 a.m. Happy trading to you all. Alright. The title of this video is Master High Frequency Trading in 1 hour. Master High Frequency Trading in 1 hour. In this video, I'm going to reveal to traders a specific high frequency trading strategy that one can learn within 1 hour. Alright? So stay with us as we start this discussion. Alright? I'm going to start drawing lines on this chart very fast. Alright? Okay. So the pattern I want you to pay attention to is a pattern that some traders call the V pattern. That's the first pattern. So price goes down, start going down from here, all the way here, and then went back up, to the starting point. This is what we call a V pattern. Okay, I don't want to go too much into the the nitty-gritty of the V pattern. That will be another video completely because there are more to this, and we will measure the depth of the V pattern. So price went down, how far the price went down, you see the vertical line here, and price returned back to the starting point. Very often what we have noticed that the price, after the price went down from here all the way here and returned back to the starting point, as the price reaches the starting point, trader will take profit because they knew that some people were selling here before. So one group of traders were selling here, price went down, and now the price went back up to the point where they sold it. Trader that bought it here will take profit here. So very often you see the price will pull back a bit. Sometimes, very often, it will pull back up to the 50% of the previous move. This one, okay. So I don't want the video to be too long, so I'm going to go very fast because I want you to understand this within 1 hour. As the price pulled back a little bit, because the bulls were controlling the price lately, they were the last people controlling the price, they would take control again and push the price up. It's a psychological game. As this horizontal line here, that's what we call the neckline. As the price goes above the neckline, professional will set their target. They will see the depth of this triangle here. They will move it to the neckline, and the neckline is the target zone. Alright, so as the price crosses the target line and start going up, they will set target here and they will take profit here. This is the first pattern. Alright, the inverse is true for the inverted V pattern, which is like this. So again, I'm going to go very fast, but I'll try to speak slowly though, so you may follow me. So this time, this is the inverse of the first one. So price went up first, and then went down again to the starting point. We have what we call the inverted V pattern. Because the first group of people that were controlling the price were bullish, then they lost control here, and then the bull sold it. The bear sold it. As the bear sold it, the price reached this point. They knew that the bull were buying here. Alright? So price went down to this point. They know that the bull bought it here before. They will take profit. And as they are taking profit, you'll notice that, the price will try to rally up a bit like this. And usually to the 50% or the initial move, prior move, which is a bearish move. Because the bear were controlling the price here, they are still looking around to sell, and then they will sell it. If the price dip below the neckline, the horizontal line here, that's the neckline, professional will set their target like this. So the bear that are selling, they will take profit right here. This is a pattern that the high frequency traders are using all the time on the 10-second time frame, on the 1 minute time frame, on the 3 minute time frame. These are not human beings taking this trade, these are computers taking this trade. A pattern recognition, computers can recognize this pattern easily and trade them automatically. This is about automated trading using the algorithm. So you set the rules and the computer will execute the trade. The same pattern that we call the V pattern can be sometime changed into some traders will call it round pattern. Round. So price starting here and went all the way here. So I want you to remember, you can check on Google the V pattern, all right, the round pattern, the cup and handle pattern, all right, and the inverted head and shoulder pattern. So the V pattern, the opposite of the V pattern is the inverted V pattern. So this one here is the V pattern. The opposite is the inverted V pattern. All right. The round pattern is the opposite is the inverted round pattern. Okay. And then the cup and handle pattern can be also inverted, and also the head and shoulder pattern. The head and shoulder pattern is the inverse of the inverted head and shoulder pattern. So, all right, you understand? So I want you to learn these 4 patterns and master them, because the high frequency computers are using this pattern consistently. All right, they are using it day in, day out, day in, day out. All right. So these 4 patterns and their opposite, you must master them and know how they trade them, especially know the target levels. You understand? I'm going to remove my lines. I'm under pressure to perform very fast. All right. So the pressure is on to demonstrate to traders within so that they can master high frequency trading within 1 hour. And this is a technical high frequency trading. As I explained to you before, there are 2 types of high frequency trading. One is focusing on low latency infrastructure. So they spend a lot of money on low latency infrastructure to have access to major economy, global major economy news before the general public. So when the news is released, all right, major economy news like non-farm payroll, ISM, they want to have access to the news few seconds before the general public. So they spend a lot of money on what we call the low latency infrastructure. All right. The second type of high frequency trading, this is what we are discussing here. This is a technical high frequency trading, trading on a lower time frame. In fact, it's a type of scalping that is done automatic. So automatic scalping, trading. So they spend a lot of money asking the computer programmers or computer engineer to create for them trading robots that will take small pips on a lower time frame with a tiny risk on a 1 minute time frame, on a 10-second time frame, on a 2 minute time frame, even on to 10-minute time frame. Sometimes you can see them even working on the 50-minute time. They are all over the place using different strategy. But when we are talking about high frequency trading, technically they are mostly on the 1 minute, on the 10-second, on the 2 minute, on the 3-minute chart. All right. So pay attention carefully, because I'm going to go very fast now. So I explain the pattern that we need to look at. Here, we are looking at Apple stock. For financial instruments, we're going to discuss in this video. The first one is Apple stock. The next one is Dow Jones. The third one is the dollar yen, and the fourth one is the euro USD. You can see that this is Apple stock. The price went up like this. This is an inverted V pattern. All right, you may call it inverted round pattern or inverted. Whatever you want to call it, cup and handle, whichever way you want to call it. So it went up and then went back down. So now you can see that as the price went down finally here, as I explained to you, you will see that the price tried to go up a bit. Usually it will stop at the 50% of the prior move. You see here, see this section here, so it stopped there. We can put a horizontal line there to highlight where the price, the level, see, stop there. So the initial move. Sometimes we go above it, 60%, whatever, but don't force it. Don't force it. All right, unless you have a lot of money, like high frequency traders. But if you are individual, ordinary trader, You need to know exactly what you are doing. Don't trade like a robot. Don't use like a magic wand. Don't get too excited like a child and go and throw money away and then come back and mark this video down because you failed to implement the strategy. All right. Now I'm saying this because I know what's going through the mind of traders. Okay. So it's normal. I'm not having a go at trader. Okay. So now you see the upper stock. The neckline is this one here. So we can extend it now. Okay. This is not what I want to move. The neckline is this one here. Okay, if the price dip below the neckline, you see dip below it now. So before the market closed yesterday, but the target is in fact let's round it, the yellow line here. So the professional, though the market is closed yesterday, they are still watching this level, which is the target level for upper stock. So when the market opens today, the level that you must keep your eyes on is the one I'm going to color now into pink right here. Okay, so watch this level carefully, the zone of $564.50, 56450. All right, all right. Sometimes you see like this, they stop, and then the market open, they be gap down to the target level straight away. All right, you see now. I'm going to bring on another financial instrument because I am under pressure to perform. I don't want to go over my 20 minutes, so I got 8 minutes left. All right. You see now, so this is the pattern here. The computer can recognize this thing and trade it straight away on the 2 minute, on the 1 minute, on the 10 second, on the lower time frame. In fact, on every time frame. All right. Bringing on now the Dow Jones Index. We are on a 2 minute chart. Okay. And mastering high frequency trading within 1 hour. All right. I have my line already drawn here for the Dow Jones. The same scenario. You remember the Dow Jones Index is a market leader. It's a market indicator. Okay. The Dow Jones Index is a market indicator. All right. So if you go to www.dayprotrader.com, I talk about market. Click on Market Watch, and you will learn a few more things about that. Okay. It's not surprising that the Dow Jones is having the same pattern like Apple stock, okay, because it's a market indicator, all right? And the Apple stock, in fact, is also a market leader, all right? So market leaders, market indicators, technical indicator, fundamental indicator, these are things you need to know, all right? And the trading triangle. So now you see here, this is the inverted V pattern again, or inverted whatever. As you can see, the last move was a bearish. And as I explained to you, it's happening all the time, isn't it? Yeah, you see? It went up again, just above the 50%. We will consider the yellow line as the 50% here, you see? It went above it though, yeah? It went above it. 50% should be normally somewhere here. Okay, so this is our warning line here. As you can see, it's still below it. The target is where? You see, it's happening all the time. All the time. And the high frequency traders love this. This is their favorite pattern. That's why I'm showing you this. So the target in fact is the target in fact to be strict like Lavoisier, or to be exact like Lavoisier, okay, it's at 15772. 15772. All right. Okay, that's the exact, but the price does not have to go there because there's a one support here at 15791. So watch it, okay? It's happening all the time. And as you can see, this is not what I want to move. The neckline, wow. If you extend the neckline, you see? You can see sometimes you can be messy like this. You see it's a bit messy, blah, blah, blah. So suppose you saw it here, and then they take you out, you see? So you need to be careful. Draw the trend line. You are not high frequency trader, all right? You are not using computers to take the trade, so draw trend line, draw channels, okay? So this point and trade like, okay, an intelligent trader, okay? So don't just force it, chase it, okay? If you want to chase it, control it, and know what you are doing. The best scenario, if you want to sell below the neckline, the stop loss will be just on top of, okay, this rally here. Usually, professional will place their stop loss there, depending on your risk tolerance and what you are trying to achieve. Don't gamble it, okay? It's not magic one, it's trading. Okay? So here we are. So the target is there. Same scenario you see here. Sometimes you will see multiple pattern. So we may consider this also again as a V, another small V. Go into the mind of traders, because they will be looking at the chart and seeing different things. Nothing should stop you. So there was this one, the bigger one, then we have the smaller one. So you may just go like this and say, okay, minimum this level. All right. Again, you see it went round again. It went up and then turned around and went back again. You can do exactly the same thing here. Just if you want to trade like high frequency traders, you are scalping and you are taking a small pip, 5 pips, 10 pips, 15 pips very fast, consistently. But you need to be very disciplined and know exactly what you are doing. Otherwise, you may end up losing. All right. My apology for the noise in the background. It makes sense. The third financial instrument is the dollar yen. Let's move on very fast. Dollar yen. We got how many more minutes? 4 minutes. Let's stick to our time. Let's go fast. Again, I have my drawing already on the chart. Okay, so price went down. This is a V pattern, or you can call it round pattern, whatever, or cup and handle pattern. Went down and then went back up to the starting point. As you can see, once again, the price pulled back a bit, isn't it? Yeah, but you see it's stuck below. If we draw a line here to highlight the 50% of roughly, normally 61%, you will dip below the 50% before going. So if you draw this line as a warning line, you see that it went down, went up, and then pulled back, but didn't go up, went horizontal. Sometimes you will go like this for a while, and suddenly it will come above it, okay, and then boom. And the computers, once they recognize the pattern, and the pattern is set the price going up, they buy it very fast. Sometimes it may stall, which means the price will not hit the target straight away. For one reason or another, they will take profit very fast. Depending on the time of the day, can be messy sometimes. Sometimes, especially when the market opens straight away, you will see they will push it very fast, phew, to the target. So though the dollar is sitting here, there's a high chance that it may go again to 132.33 zone. Okay, call it 132.33 zone. Okay, because it should go up more, 132.33 zone. Watch that level carefully. They may push it even into to that level, but there is a high chance they may allow it to come to 102.44. Okay, here, what I'll do, I'll put a line there for you. Though the target is here, watch it for the dollar. They may push it if okay, if it goes above the neckline, now it's below it. So don't assume anything. All right, don't assume anything. This is not a trading robot. This is about high frequency trading, telling you exactly what the high frequency traders are looking for. Okay, I will not dwell on this because our time is approaching very fast, and I'm under pressure to keep this video below 20 minutes. So I'm going to bring on now the last financial instrument. I hope you get the message about the high frequency trading pattern that they are using on the 2-minute chart, on the 1-minute chart, on the test. For the Euro USD, you see here the pattern. There's a pattern here, but before that there were other patterns, but I don't want to spend too much time on it. Okay, you see this one here was already achieving. I draw it like this. Be conservative when you are setting your target. Don't be too greedy. You may see sometimes I go into the mind of other traders. You can do different type, different measurements because it was a bit messy. So you may go into their mind. So you may set it like this, which is already achieved right here. All right, for the euro. Now there is another pattern being in place now, and I got only a few seconds left. I'm going to finish this video now, and I encourage you, if you don't understand anything, post comment below, and I will get back to you. And now we have an inverted, and we will be watching it to pull it back down. I hope you have learned something from this video also. Okay, and we put into use to make excellent decisions. This is about master high frequency trading within 1 hour using the V pattern, the cup and handle pattern, the inverted head and shoulder pattern, all right, the round bottom pattern. Okay, until the next time, enjoy yourself and be very happy. We are a TSTW 24 traders. Speak to you soon.